We now move our attention to farming and fertilizers, and that's because you're most probably going to expect a growth in that sector. Governments are also encouraging agriculture and farming to help with the fight against global warming. Land devoted to organic farming is also on the rise, which is good, right? But there's a problem. Fresh manure. With the expansion of agriculture, expect an increase in the demand for fertilizers, but fresh manure sometimes contains pathogens such as bacteria and viruses like salmonella and certain strands of E. coli, and they can cause diseases in humans. Raw manure is so dangerous that farmers who raise livestock can't transport the untreated feces to other markets. Untreated cow feces can be a major source of pollution if large amounts of it are washed away in heavy rains. The Colorado State University explains that certified organic farmers cannot use fresh manure for a minimum of 90 days before harvesting fruits and vegetables produced for human consumption. Now here's one Toronto-based tech company that transforms livestock waste into a high-performance organic fertilizer for the North American market and Europe. And this is how EarthRenew does it. The raw livestock waste is firstly separated from foreign objects, then it goes through a natural gas turbine that treats the waste to eliminate potential pathogens before being combined with environmental friendly additives to create their own proprietary fertilizer blend. But that's not all. The heat coming from the waste not only powers a natural gas turbine, but the excess power can be converted into an output. And that's a big plus when you're in a competitive industry like this, because they have diversified their revenue streams into natural gas and Bitcoin mining. Now, as of September 30th, 2020, they have generated $500,000 in revenue using $4 million in assets. Revenues have grown at a compound annual growth rate of 52% since 2015, but let's not forget that they had no profit in 2017 and 2018. Now, it's a 30-year-old company, but they commenced trading in the Canadian Securities Exchange on January 10th of 2019. Over the last year, the stock has not moved much. The potential catalyst may be the direct involvement with natural gas. The current stock prices range between the 20 to 30 cents per share region in the middle of the 52-week band of 14 to 53 cents, showing the market is still unsure where to place the stock. So finding the best and lowest price to open a position may just become a very profitable investment in the long run. That is, if ERTH stocks rise to alarming heights later on. There are pressing concerns to replenish soil and reverse the environmental damages inflicted on Mother Nature, and industries and businesses like this seem to be headed in the right direction. But with an increase in demand for these businesses and their products also comes more competition, and that's why it's a kind of a big deal for investors to keep an eye on both the company they're investing in and its competition. Well, guys and gals, millennials and madmen, that's it for today. Do leave us comments, concerns, or compliments, and don't forget to push that subscribe button. See you next time.